Good afternoon, ladies and gentlemen, and welcome to today's live trading session, and also look at the non-farm payroll numbers as they start to come through. So, non-farm payroll due in about 10 and a half minutes from now. And obviously, as I wrote in the market comment this morning, we're looking for quite a decent number. I think it was 548,000, and a fall in the unemployment rate to 4.5%, 4.5%. So we don't have the opening bell as we normally would, as we're doing a live trading session. I am already long the Dow. I bought Dow at 34,706 early this morning. Had a TP in there at about 34,745. Missed that by about 5 pips, as you can see here on the screens. I'll just put the crosshairs on there, so we just missed that slightly up there. Unfortunately, we've fallen back below my entry point. Willing to run with this trade a little bit longer, so I'm not actually going to execute the trade as we look ahead to non-farm payroll number. Really just going to go with the trade that I already have in there, which is slightly above the market at the moment at 34,706. I'm expecting a good number. But equally so, I think the thing that's really pushing this market around at the moment is Omicron, or the latest variant of COVID that we're experiencing around the world. And I was just listening to a doctor talk there a few minutes ago about his views on the new variant and the rate of spread in the US, and his opinion was that it's extremely minimal at this stage, but the science isn't really there to see how this variant is going to evolve over the next while. So, as always, I encourage you to ask questions. There's a few things that I want to talk about in relation to the trading that I've done this week, which you all see on Telegram live as it happens. But if you do have questions, do put those through to me, and I will do my best to answer them during today's session. If for some reason I don't get round to it, I will respond to you over the remainder of today or the weekend. First off, I was expecting today to be a very quiet day, just because I didn't want to get drawn into any real battles with the market. Unfortunately, I did get drawn in this morning. Stopped out one trade and then have continued to hold the others, and I'd like to talk to you a little bit about my rationale in terms of the way that I approach those sort of situations. I think I've made it clear many times over the last weeks and months that one of the things, I've always stressed the importance of risk management and being able to manage your risk appropriately, not carrying too many positions, and when you do have, and equally so, I think I've obviously, or I will have commented many times about the fact that whilst we all aspire to make money through the trading, that's not all that trading is about. Sometimes you need to manage yourself through a bad position, and that was certainly the case this morning. I think in conversation or email conversation with one of you this week, we spoke about weathering the storm. There have been a few storms. Volatility has picked up. I think we're up at about 26%. It's off a little bit today. But volatility has been strong. We've seen some big movements in the market. And if you have too many positions on, your position is increasing dynamically. Your losses are potentially getting out of control very, very quickly, and panic quickly sets in. Now, panic doesn't necessarily set in with me anymore, and I have a fairly it's not that, or there are no hard rules with the way that I deal with a loss-making position, but there are ways that I try to buy myself a bit of time, mitigate some of the risk, and hopefully live to fight another day, which I think today is a good example of, because potentially there was a stop across all of the positions that I was holding at about at about 10:30, 11 a.m. this morning, and yet, bar one of those trades, I've closed profitably, and then I still have two of those trades still open, one of which is a DAX position, and the DAX took a bit of a hit today, probably far more so than the Dow. I mean, early this morning I started to sell the DAX at 15,429, I think was the number, and we've slid all the way down to about 15,225. I stopped out fairly close to the low of the day, but it did enable me to buy some time just to look at these positions a little bit longer, hold them a little bit longer, and hopefully breathe some life back into them, which we've seen during the course of the remainder of this session. So some of the esteemed guests that they have on CNBC are shortly going to come up with their forecast for non-farm payroll. I don't bother to listen, be very broad. You'll have very low numbers, you'll have very high numbers, and we'll probably settle somewhere in the middle. So until you actually get the number out, there's no great deal of point working with it. I do already have a position on my, my preferred approach when I'm looking at any data or any announcement is to be flat, and just to respond to the number. So if I just bring up the Dow at the moment, we're currently trading 34,720. So from the start of when we started to talk, we've pushed back up to probably to halfway between the level that we were trading at and the TP level that I have in just above the market. So what I'm looking for is a sharp movement to the upside that takes out my TP, and probably looking for the first 5 minutes to trade out before I really make any decision about a further trade. Now, I'm not going to trade a great deal this afternoon. I'm up over 2,000 pips on the week, and it is I don't want to be spoiling that situation. We are struggling to get up to my TP level, and we've reversed a little bit, went up to about 730 then. But you will see fairly dramatic movements as the number starts to come through, and the trading starts to increase. So the question at the moment is whether or not I take this out a little bit early, or I leave my TP in there and hope to see that a hit. We've got about 2 minutes or so till the number comes out. But what you do often see, and I don't have one that I can show you here on the screen, what you do often see is a sharp movement to the upside, a sharp movement to the downside, possibly even both over a very short period, and you can have fairly decent limit orders executed on both sides of the market. So we're back down. We've been up to about 730, we're back down to 710, fairly close to my entry point, so I don't think I have a decision to make at this particular point. But you'll see, just in the last minute or so before we get this number, you've seen a fairly decent bit of movement, gone down back below my entry point now, and you're going to see a bit of fluctuation. There's no point getting too involved in it at this particular point. We're just waiting for that number to start to come through, and we're fairly close to my entry point, so it's a really good or a reasonably good indication of a live trading environment anyway, because we are trading at the level that I have in the market. So there continues to be a little bit of fluctuation. What we'll do as soon as we finish this is we'll look at the trades for the week and look at a couple of things that I've been thinking about during the week in terms of the way that the trading went, and then, as I've said, if you do have any questions and they manage to get through to me in the allotted time, then I'll get round to those as well, and happy to answer those live on air as well as we can. So the numbers just coming through here. So there's been a big miss on non-farm payroll, and I think it came in at about 450, I think was the number that I was hearing there. So we've seen a bit of a movement to the downside, as you would expect. may well be that we'll see a bit of a pickup. Obviously, you see on the sharp spike to the downside, we've got a 1 minute chart open here. So on that big movement to the downside, opportunity to pick prices up, maybe 50 pips or below where the market was trading when we started this process. So I'm surprised. The unemployment rate, though, has come in significantly better. It's only 4.2% versus an estimate of 4.5%. So you see gold picking up significantly. Gold has jumped. I was long gold earlier this morning. It was trading about 1770 as we started this particular process. So you see gold there trading up to just towards 1778 or so on. So my TP's been taken out, and I think that was, largely off of the unemployment rate coming down as low. So 4.2% versus an estimate of 4.5. So a significant movement there. So happy days on that particular trade. The DAX position is the only position that I have left open. And I'm going to let the next 5 minutes or so play out whilst this trade goes, or whilst the markets react to the data. Very late notification there on the close, but there's nothing I can do about that at the moment. So what I think I'll do now is I'll switch over to the trades for the week. So we do have that Dow trade is now closed, so just reflect that as such. In a minute I'll put the prices in. That will take us to about, and this is just on closed trade, so I have one DAX trade open that's about 70 or 80 pips against me at the moment, but it will be just over, on closed trades alone, it will be 2,200 plus points on the week so far. Obviously it started the week with a Dow position that I carried over, and we still see the Dow moving up at this particular point, stronger implied open at this particular point as well. And so October payrolls were revised as well, slightly better from where they were initially. So there's a few things there that are a few things that are cancelling each other out, but I think the unemployment rate is the most significant of those that is seen as a little bit higher at this particular time. So just going back to the results, there's a few things. So the trades that I carried over on Friday, I'll be the first to admit, and I think I did this in the comments over the course of the weekend, the early close to the Dow caught me unprepared. The market got extremely volatile over a very short period of time. There was no liquidity, and the market was flying 100 points in either direction in literally seconds. And there was just no point getting involved at that particular stage. So I decided to carry the trades over in the belief that the immediate reaction was an overreaction to what we were seeing with the new variant of COVID. And thankfully that was the way that it worked out. I did keep an eye on weekend Dow prices. Again, not a great deal of liquidity on them, not a great deal of, I wouldn't afford them a lot of credibility in terms of how the market was actually trading. But I think that at least they gave me some belief that the market wasn't collapsing completely at that particular point. So that was the beginning of the week. And I just want to talk a little bit, we have 4 or 5 minutes left to go, about the trades that I had on today. And I had about 4, maybe 5 trades on at about 10:30 this morning, all of them going against me. The sell-off was intensifying a little bit. We were moving back down towards about 15,200 in the DAX. The Dow was moving back towards 34,500, 34,550 I think it was roughly. And so what I chose to do was to close one of the trades out. You can see it there on your screens. The DAX trade, the 5th one down or the 4th one up, So DAX that I sold at 15,331, which is about the level that we're trading at now, I closed out at 15,225. Quite a brutal stop, but what that allowed me to do was to reduce the number of open trades to 4. I'd already banked a couple of winning trades this morning. I very quickly put stops in against one of the Dow positions, against one of the DAX positions, reasonably tight. They were only about 25 pips away, and that enabled me to buy a bit of time to see how, see whether or not the market would recover from those levels, which thankfully it did. You know, one of the other ways is to, and this is not my favoured approach, but you allow a maximum percentage loss across all of your positions and then stop out en masse. As I said, that's not an approach I favour. For me, it was about stopping out one of the trades, putting stops into a couple of others, and seeing, or at least giving them that opportunity to recover. I knew what my maximum exposure was able to push the button if I needed to for those for the remaining trades that were there. But really, the thing for me was about staying in the game, and I wouldn't have been able to do that if I hadn't stopped out one of the trades. I know there are some people who use systems on MT4 where it will look at your maximum exposure to the market. When that hits, it will stop you out en masse. So Michael McDermott is asking, what's my short-term view on the Dow? I think we've had a very significant sell-off, Michael. Sorry, we've got a couple of minutes left, so I will just talk about the Dow for that period. We've probably sold off from about 36,500 to where we are now. It's not quite a correction from a 10% type of movement. We've not really been too close to that. I do think there are opportunities to buy on dips. I think a lot of what is going to happen over the next few weeks really relates to what your thoughts are on inflation. I think there's an understanding that it's with us for a long time now. I've seen some estimates this morning that potentially we had a 6 print last time round. I've seen prints as high as 7 going forward. So inflation is going to be here for a while. That's going to keep a ceiling on the market, but I do think there are opportunities to buy on dips. There's still lots of money on the sideline, lots of money to be invested. So I definitely think there are opportunities in that regard. The big question, I suppose, and the one that nobody really has the answer to at the moment, is about how Omicron will develop. What is the science behind it? How efficient are the current vaccines going to be against that? I saw something from I was watching a report yesterday, or possibly even this morning, about the lack of vaccinations in the less developed economies, or the poorer nations that exist around the world, and they just simply don't have enough vaccinations because they can't afford them, and that's where these variants are going to continue to breed. So, I suppose in my own thoughts, COVID is with us COVID in one form or another is going to be with us for some time, and I think it's the combination of COVID, inflation, are the two things that concern the markets most at the moment. So I think there's a ceiling. I think there's probably a reasonable range that we're going to trade in over the next period. The support around 34,100 has been quite strong until now, and I think that could possibly continue, but equally so, I think moves back up towards 35 and 35 and a half are going to meet with resistance as well. So I do expect the range to be tighter than we've seen for some time, but with year end, with earnings again in January, I think there is potential for a push higher in the latter part of this month. Unfortunately, I've run out of time, so I'll leave you there. If there are any further questions, I will get back to them over the course of the weekend, or even this afternoon. I probably do one trade only around the opening bell this afternoon. I may not even do that. I have the one DAX trade left to close, and thankfully we not completely turned around the position today, but it's a lot closer than it was. Thank you very much for joining.